What's up, guys and girls? Today we're going to be talking about Tesla. That's down 6% on the day. I closed out one set of my puts, which were up 20,000 on the day, 92% return on the day as well, which is massive, and closed out for a $13,750 profit. I'm still currently holding on to one set of puts, which we're going to explain why I closed one and why I ended up holding one. We're also going to go into great detail about why we were short, why I believe we could still see this move down to $180 and at least probably down to 200 bucks. Now, more importantly, if you guys want to follow along with these trades, go follow me on Twitter and be a part of our Discord community. They're both completely free, 12,000 members in the Discord and all of the courses, and I put all of my trades out here basically for free. If you do want all of them, you can actually sign up for our alert service to get access to much more. But I throw a lot of my trades out for free for you guys because I know what it's like when I first started trading to hear a reasonable, sensible voice in this market and to have somebody there to kind of guide you guys along the way. So let's go through first. Let's just talk about this Tesla setup that we are looking at. We're going to go first with the technicals. Then we're going to talk a little bit about some fundamentals that are currently happening, specifically with the bond market. And then from there, we're going to look at unusual options activity from yesterday going into today. Because all of these things build a picture, all of these things are pieces of evidence, and all of these things are that we want to put together to create a thesis and then risk our capital accordingly. We're going to start by looking at a 4-hour chart of Tesla. And the first thing that I need you to understand is that we're running 3 SMAs. The first one is an 11 SMA, which is this quicker moving one. Then we have the red one, which is our 50, and the 200, which is our gold. If you can see here that we are in still a downtrend. If we look here, moving back over the past 180 days, you could consider that we're in this uptrend still, but we are still in a downtrend. We're trending under all of these simple moving averages. If you're somebody who doesn't understand how to dictate trend, I recommend you just throwing up some simple moving averages, at least a 200. And then if we're trading significantly under the 200 or the 200 is trending down, which is what's starting to happen now, you can safely say usually that we're going to be in a downtrend. And so if we look at this, we are obviously fell from earnings, pulled back down. We're using this 11 SMA as a potential resistance point. So now my time to go short and where I first opened my short position was right around here on this breakout up of about 212. My thought process here was that our risk versus reward, so going short here at about 213, down to 184 was about a 14% move to the downside, which is very, very good. And then from here, to our stop loss would basically be a 4.5 to maybe 5.5% stop. So that means starting out with this position, we have a 2-to-1 risk versus reward ratio. But the way that I usually build out positions, specifically these bigger time frame ones and these bigger positions from a monetary standpoint, is usually by layer buying. And so once I start to see that a stock is trading in our trend direction, it has retraced back up to a level that I feel is really good from a solid risk versus reward standpoint. Usually what I'll do is I'll place an order early. And this is where I started entering at 212.50 last week. And a lot of people are like, dude, it's too early. And I'm telling everybody, like, I understand I'm building a position because number one, I understand that the chances of us coming right up to the perfect entry every single time is just not going to happen over and over and over and happen consistently. You might get a couple of good setups like this one once or twice a year, but overall, I've noticed that you just kind of have to be a little sloppy with your trading, tight with your risk management, but a little sloppy with your entries, because at the end of the day, we're trying to trade with this trend. So my thought was if we rejected at 212.50 and I had maybe a third of the position size that I had, this move down here would have been about $20,000 in profit, which would have been huge. Instead, we went through, I saw this thing move up, and I averaged down one more time up at 220 bucks. I need you to understand this. I'm not averaging down just to pray and hope that the gods help me. Because the truth is, if I had no plan here and I was just shorting the downtrend and every tick up, I started averaging down, even if Tesla cratered and moved down to $183, I wasn't right. What I did was not correct. Just because you make money does not mean that what you're doing is correct or going to help you in the long term, right? A lot of people think that as somebody who's a professional trader and I guess like a fucking influencer or whatever, I hate that word, but as somebody like myself, they think that at the end of the day, we are always focusing on being right and that we're constantly focusing on getting the best possible return. One of the worst things that can happen is you can be fooled by randomness. You could average down heavy at a specific level, stock could retrace or even move down to a lower low, and you could think that you're a much better trader than you are overall. So I understand that I'm never going to get the perfect entries. My first entry was pre-planned at $212.50. My second one was pre-planned at $220. From here, I'm not going to average down more, but what I'm waiting for is a close above my target stop loss. And this is so important because what we're looking for is confirmed closes over specific levels. If I was playing this instead of a confirmed close, I was just playing, for instance, as soon as it hits 220 or as soon as it hits 222, I would have got tagged out of this trade. And so if you're somebody who gets tagged out of trades a lot, this is something that could end up helping you. We see this change of control, or this change of character right here at 202. So we push through this level and we start to drain. Now, I know that the chances of us just draining straight down to 185 is very, very low. There's a good sign that we're going to at least retrace back to the 11, or at least back up to this order block. This order block, this resistance level here, is very important. While I'm watching the sell-off that's occurring at this moment, I know that my short entry is not here. My short entry is waiting for this block to come into play. So I was very patient. Boom, next day gapped up. This is where I started to go short. I'd say 212, 50, 213. As we move up into this resistance level, this looks terrible. But something happened here, which is a good sign. We pushed all the way up over the level I was looking for, but we closed underneath. So this is where I would hit my second position in. From here, we watch again. Not the best. We're not selling off, but we are not holding over 222. And then we get this drop down here on November 6th. Still looking a little bit better, but now we're pushing back up. This is not good. And look at what happens here. We come so close, so close. But I understand at this point that at 220 to 222, there's going to be a lot of manipulation. There's going to be a lot of potential breakouts, a lot of false breakdowns, and a lot of people sitting there with their finger on the trigger waiting to either enter the position from 220 to 240 or potentially exit their shorts. So I held steady. Once again, we get 3 candles that are tapping that level before finally we get this drop. Now, I took my first profit set here. This is where I closed out those earlier. I have another set of puts. In this instance, we're just doing shares, we're shorting shares, but I still have another set of puts. And what I was looking for on that first one was the gap fill back down to 205. Something that could be setting up here, and this is something that we've been talking about for a while, I'm just going to flatten this out, is an inverted head and shoulders. Now, I talk a lot on this channel about potential setups, which I'm going to be honest, like I probably shouldn't do, because you shouldn't be playing an inverted head and shoulders before the shoulder actually forms. But looking here, that level, the change of character that we were watching back here at 202, that is now, in my opinion, probably going to safely be the low. So I asked on Twitter, what do you guys think the low is going to be? A lot of people are saying 204, a lot of people saying 202. I think realistically we'll see this continued sell-off down to 202. My first position at 202, I'll probably be up $2,000, $3,000. If we continue to break through 202, the next level is 180. I don't necessarily think that this is going to happen, but you have to understand, we're trending down. This pop is getting shorted from what it seems. We're moving our way back down. And I'd say at this point, there's probably a 65% chance that Tesla's going to continue its way back down to 182. But the more important level to be watching is going to be $202 to $200. If that level is broken, if the inverted head and shoulders does not happen, then we will move down to my price target down at 180. And you can see my targets down here, which from this level is a 15% move to the downside. So if you could have been patient, and this is not going to always happen, but if you could have gotten in when I called this out on Twitter, I actually can even show you guys the exact breakdown in which, I think I did a video yesterday, but the exact breakdown in which we were showing this trade. Because watching for these high probability setups, like I have shorts on SPY, shorts on QQQ, I'm not gonna be able to find it right now. But basically what we're looking for is a high RVR. So if we're setting the short here at 220, we're setting a stop loss up around 225, 226, and our take profit down here, you're looking at a 5-to-1 risk versus reward. You know, like even shorting $10,000 worth of shares, you're risking $300 to make $1,885. These are the types of trades that we look for. Now, if I was somebody who entered a ton of puts in the past couple of days, and this is a question a lot of people have probably asked, like, well, what if I actually got in at that price? what I'd be looking to do is kind of what I said earlier. Start to scale out, sell half down at 205, sell the other half down at 180. And then if we do bounce at 200 and you don't close it out, even if you ride this back up to 225, your entire position, because you've been scaling out, taking profits and then taking a small loss, you'll be sitting somewhere around even. If we move over to look at the flow, yesterday I gave a very detailed explanation on what the heat map is. So I highly recommend you go back and watch that, as well as what's considered active versus passive, and also what's considered to be confirmed versus unconfirmed. Today, we saw most active puts, Tesla was $623 million. That's at the bottom left side of your screen. That is significantly lower than we saw yesterday. And something that's kind of odd here and kind of, I don't want to say worries me, but makes me think that Tesla's not just going to drop instantly down to 185, but that we might see a little bit of a bounce, potentially holding at least $202. There's a lot of people selling cash secured puts. A lot of people selling cash secured puts at $220 as well for the next 2 weeks. So there's a chance that we can bounce back up. But the one thing I'll say is that there's not a ton of selling pressure on the options market that's pushing this thing down. If tomorrow we see, a gap down and then we see a ton of big money coming in and getting a ton of puts, that's not a good sign. There's confirmed $126 million worth of puts that came through today, which confirmed is a decent bit, but it's still not anything I would say that's worth really being worried over or striking on my charts or putting in my notebook. Side note though, I will say that the big money guys who came through and actually did get puts today, the confirmed people, they killed it. We have this guy here, 320% return, 272% return, 128%, 139%. So watching that flow come through at 11, 10, 15 in the morning was your perfect time to short. There's also, funny enough, we can talk about this as well because a lot of people within our streams have been asking me about the 15-minute open range breakout. But if you're somebody who's just looking for overall direction on the day for Tesla or whatever stock you're looking at, I recommend you use the 15-minute or the 30-minute open range breakout. Some charting softwares actually have this as an indicator, but what I normally do is I'll just draw it out. What we're going to do is if we're doing a 15-minute, we're going to take the high and the low of the first 15 minutes of the day, and we're going to draw out a horizontal line. So the top of that range is going to be $220.80. And the bottom of that range is going to be down here at about $216.56. Now, in most cases, we will either trade between the range using this as a support level and 220 as a resistance level, or if we're going to reverse, which you saw today, we will break under this level, use it as a resistance, and then we will usually find our overall trend for the day, which today was a massive move all the way down to 207.50. If you guys have been watching this long, I first of all want to say thank you and make sure you hit the like button and subscribe. I hate to ask, but it really is the easiest way to actually push this video out there and help the algorithm get to it. As well, if you guys want to trade alongside of me every single day, go and follow us in our alert service. Once you're in our Discord community, you just go to the upgrade section. You get access to all of my trading bots that I have actually coded myself. I don't go and buy them from some company. We do have one in there that I want to get rid of, but everybody loves it, the TradyTix bot. So I keep it in there for you guys. But you get access to all my trades. Today we closed out 20,000 on Tesla, closed out EA for $900, profit as well on Meta, $650. And so the goal is to help you guys build up capital your first month, teach you guys exactly how I trade, give you access to all of our suites of bots, and to get you guys profitable and consistent. So go check it out. It's only $50 and it will more than pay for itself the first month. While stocks like Tesla sold off aggressively today, the S&P 500 did pretty well until the back half of the day after Jay Powell spoke. And for those of you who do not understand yield curves or inversions, we have an entire video and actually a brief PDF and course over on our Discord community. But basically what happens and why a yield curve inversion is bad is that short-term bonds actually give a better yield or a better return than a long-term bond. And what this does is it makes people, specifically big money who runs the market and moves the market, it makes them usually pull their money out of a very risky market like we have right now and put it into something that will give them 5% in the next 2 or 3 years, guaranteed. And if you're a hedge fund or a whale or somebody that we talk about a lot on this channel when we're following their trades, these people have made a lot of money in the past 4 or 5 years, and they would rather take that capital, put it into something like a bond for 2-3 years, get a guaranteed return, and wash their hands clean, come back, see what the economic situation is in a couple of years. So looking at the S&P 500, first thing you're going to notice, just like we said before, is that we're not actually fully in a downtrend. We're kind of sitting here in a wonky level. We're under the 200 SMA on the 4 hours, so we are technically not in an uptrend. The 11 SMA we're currently over, and the 50 we're over. In this instance, we actually broke through 438 and 440, and we have a major resistance level. The 200 SMA is a very strong support. Keep going back, you'll see that we've been using this as a support back in March of this year, ever since we broke back up above it. So the fact that now we've pulled down, came back up and tested the 200 SMA, retraced again, bounced and tested this SMA again, it seems that we're probably going to reject. This would actually normally be considered a bullish move to the upside, but because we're trading under the 200 SMA and there's a massive bearish order block sitting here, there's no way in hell I'm going to be taking this trade long. Something else that's notable is going to be the two volume gaps or price gaps sitting here basically between $433 and $430, as well as this even further gap down here at about 426.38 to 424. There's a saying in trading that all gaps need to be filled, and it's not that every single one of them always happens, but most of the time they're liquidity zones where big money wasn't able to get into those positions, so they usually revert back down to fill those moves. You can see here as well, which I've been talking a lot about on Tesla, just like Tesla, potential inverted head and shoulders pattern setting up with a neckline at about $440. So if everything moves to the way that I'm expecting, I think we'll probably see SPY move back down to 422/420 in the next couple of weeks. If we bounce from there, we could see them move up to 440 and probably end the year somewhere around where we are right now, and then test in 2024, I think, the move back up to 450. I do have some December puts in my long-term position or my long-term account on SPY, and I do have them on QQQ as well. If this pushes up over 422 and holds, that will be my time to exit out of this position for sure. QQQ, much looking like the S&P 500 and Tesla, sitting up at this resistance level, big bearish order block in play, and just like SPY, we have a volume gap, one price gap here at 364 to 363, and a second price gap down at about 357 up to $361. Looking at this, normally you would think to yourself, it's time to go long. We're trading up over this resistance level, but you see there's a lot of selling pressure, specifically from 375 down to 370. We are over the 200 SMA, which is a much better sign than the S&P 500, but I still don't feel that this is a good time to go long. I currently have a short position open, which we covered briefly yesterday, but I'd be looking to short, set a stop loss up here around 376.55, and take profit conservatively down at 362, which would fill this gap and hit the 50 SMA. But really what I'm looking for is that move down to 356 and best case down to 352. But 356 is going to be the number that we're going to be looking at just because it's conservative, and I believe there's a high chance of that happening. Even if we set this trade up like this, you're looking at a 4.6 RVR, so close to a 5-to-1 risk versus reward ratio, which is very, very good. In this instance, if we saw volume come through, we pushed through that 374 level and made a higher high, I would be looking to exit my position. If we're talking about volatility, we have to be talking about Maro. Maro is something that I've been talking about on Twitter and in this community for a bit. We were initially looking at this trade when we saw the move through this change of character of $9.50. In most cases, I would not take a bullish position on something that is trending this negatively, but we see that we had a big push up. We have the potential Bitcoin ETF, which really pushed a lot of these Bitcoin mining companies up. And then we also have a breakout that was occurring. I actually haven't looked at Bitcoin in the past day or so, but here we go. A Bitcoin breakout that's occurring. We actually hit $38,000, which is what we were talking about in the Discord community. If you're not a part of it, it's completely free. Go check it out. Today, Maro was up at one point, I think 17, 18%. And initially, when I saw this trade set up, this is where I entered. I saw that we were diverging. I saw that we were potentially finding a bottom around 770. And then boom, this is where we got that Bitcoin ETF news. This is where it starts to pique my curiosity. I don't want to get in this ASAP because I don't think the run up to 1250 was going to happen instantly. So instead, I'm waiting for a retracement down to the 11 SMA or at least somewhere near it. At this point is where I'd look to go long. Our target is up here at 11, but really I'm looking for the break at 10. $10 is a very strong resistance, and if we break that, the move to 12 will happen so fast. And that's why back here on the 24th of October, we weren't able to hold it. If we were, we would have took a very quick move up to 1250, which is what I was initially hoping. From there, we get the retracement, we get this pop up, very solid today. And at this moment, it looks like we've pulled back and we're going to try to hold. What we want to see here is the hold of $9, the continued bounce, but really pushing and holding over $10. This 200 SMA has to be broken over. If it's not broken over, there's a very high chance, even though I have a long position, that we'll continue to probably, either ascending wedge or channel and then eventually break down. So we have to make sure that the bulls can come in and hold that position up. But I truly do believe that if that occurs, if we're able to push up over, the next level, like minimally, is going to be $12.50 minimum. If not, we could get up into the 15s, which is really what I'm looking for. So I'll keep you guys posted on this trade on Twitter. If you want to know when I enter and exit, I'll make sure to keep that public over there. And if you do want access to all my trades, you can use our Discord community and the premium alert service over there. And the last ticker that we're going to talk about is going to be Nvidia, because a lot of you have been asking me about this over on Twitter, and I actually do have a short position open. I almost opened another one today, but I held off a little bit. You guys can see here, we're going to just go back and replay, and we're going to look at Halloween. We see this move down. We shorted actually Nvidia this week, which is a very, very good short. But after bouncing off of this major bullish block, we came right up through the 200 SMA. I was expecting a potential rejection, but we continue to move our way up into that 464 level. Now, we do have earnings coming up on the 21st, which is really going to be the catalyst to push us up into the 500s or retrace us back to 380. As we saw this resistance level, this is where I thought the time to go short is solid. We have a big money block sitting here, as well as a secondary big money block. If we take our Fibonacci retracement level, you're also going to see that this is right around where our 0.76 Fibonacci level was. So I started a short at about 460. Then we see this push right up through, face rips, and then today I said to my private team, everyone who's in the community, what's up? First of all, just shout out to you guys. But I said, I think I'm going to go short with another position for December 15th, and then I actually retracted that statement. I didn't end up getting the put that I wanted. I still have a December 15th put, but I was going to grab another one. And I said instead I'm going to wait for the move up to 490 or 500, where that last order block is. So if we get a continued run up to 500, I'm probably not going to short. I'm not going to add another one. I was thinking about adding another put, but to be quite honest, with earnings coming up, there's no reason to average down into a short, into earnings while the stock is moving up for fundamental. There's just no need to do that. The risk versus reward is worth a short right now, but hammering too much capital into that trade for just the fact that the risk versus reward is good is not really worth it. And that's, a lot of the times where I have to check myself, even after doing this for 9 years. So what I think is probably going to happen, if earnings weren't here, I'd expect the rejection and at least a move back down to 444, maybe the price gap down at 420. If I had to bet on earnings, I would think that we're probably going to pull back down to $400. I think that this company is phenomenal long term. I think it's definitely overvalued. I do think that this is such a disruption company, and even looking to we're not even going to talk, we can talk about the AI possibilities and the future and everything for this company, but in general, I don't like shorting something that's fundamentally on a good move up, but I do believe that we are due for a pretty significant pullback, but we'll see. I mean, the weekly, if they come out with earnings, they smash, they give good guidance, could see it up at 550. And I'm cool with losing money in that situation. I'm cool with taking the capital, putting it towards that, letting it play out, and seeing what happens. I hope this video helped, guys. Thank you, as always, for all of your support. It truly means the world to me. I can't thank you guys for everything that you've given to myself and to our community. And if you guys want to trade with me every single day, get access to all of my trades in real time, my swing trades, my day trades, my leaps, access to all my trading bots that I've written out myself, the link is in the description. It's only $50 per month. It used to be free for the first month, but we had too many scammers. So $50 for the first month, it more than pays for itself. And I'll see you guys next time. Peace.